And a very warm welcome to Policy Watch, our weekly show that keeps you abreast of all the major macroeconomic developments of the week. Our three top stories this week are: first, the spate of macroeconomic data releases; second, the infamous shutdown of the US government and its implications for India; and third, the government's reported attempt to spur demand in certain sectors by giving funds to public sector banks that they in turn can lend cheap to customers. And joining me in the discussions is Professor N.R. Bhanumurthy, Professor, National Institute of Public Finance and Policy. Welcome to the show, Bhanumurthy.
Pleasure.
The week started with a number of data releases: current account deficit for the first quarter, fiscal deficit for the first 5 months of this fiscal, and core sector growth in August. While core sector growth was moderately encouraging, both current account deficit and the fiscal deficit numbers were rather discouraging, especially the fiscal deficit number that showed that we've already crossed 75% of the fiscal deficit target for the year in just 5 months. How should we read these numbers? Is the glass half full or half empty? We'll get Bhanumurthy in on this, but first, a bureau report.
India's current account deficit, or the difference between net inflow and outflow of foreign currency for April to June, stood at $21.08 billion. Its trade balance, or the difference between net imports and exports, was rather high at $50.4 billion. The current account deficit figure came as a relief to the government, as most estimates suggested that it could be as high as $23 to $28 billion in the first quarter. A sharp decline in gold imports are expected to bring down next quarter current account deficit numbers even lower. Estimates suggest that current account deficit could be $10 billion in the July to September quarter, raising hopes that for the entire fiscal it be contained within the government's original target of $70 billion or below 3.7% of the gross domestic product. Also, an expected increase in exports due to depreciation of the rupee as well as improvements in economic conditions of developed countries are also estimated to cut current account deficit. But not all is well with the economy. Fiscal deficits has touched 75% of the budget estimate in the first 5 months of the current fiscal. This is attributed to a fall in government revenues. In April to August, government expenditures grew 17% compared to the budget estimate of 18% in the same period last year. Revenue collection, needless to say, did not keep pace. Gross tax collection grew just 9% in August to April against budget estimate of 19% growth. While direct tax collection grew 16%, indirect tax collection declined by 1% in comparison with collection during the same period last year. The decline is worrying as budget estimates had projected 13% growth in indirect collections. But there is a silver lining. 8 key infrastructure sectors with a combined weight of 38% in industrial production index grew 3.7% in August as against 3.1% in the previous month. Electricity and coal production grew over 5%. All this revives hopes for a better GDP growth this fiscal. Bureau Report, Rajya Sabha Television.
Well, Professor Bhanumurthy, how do you see it? Do you see the glass half empty, as I put it, or half full? Which way would you like to interpret these numbers?
Well, I think this is a definite indication for what is going to come in the second half of the financial year. There are some efforts by the government in containing the fiscal deficit, and knowing the current finance minister, we do hope that we are really close to the red line.
Except that in the first 5 months, he's already crossed 75%.
Right, but I think the whole efforts were on the expenditure side. But I think there are some more policy measures need to be brought in on the revenue side. And in fact, if you see the recent statement by the finance ministry, they are planning to cut the non-plan expenditure by 20,000 crore or so. Which might to some extent give some kind of cushion to the finance ministry.
But in an election year, you think the government can seriously cut non-plan expenditure?
Right, they have already made a declaration on this. I think
so you take the government's word at face value?
Yes, okay. We know that whenever we want some money for research, we know that it is the notification that is being shown to us. And
except that if you remember last year, what they had cut was they had cut plan expenditure, they had cut the more vital expenditure which they could not have cut and they should not have cut. That is what they cut last year.
My guess is that they might have learnt a lesson in a hard way. But you know, the more important is that as you rightly point out, this is the election year. But the way we had a budget in 2013 February, where everybody, all of us, were expecting it's going to be some kind of a expansionary budget. We had a very unusual pre-election budget. So in that sense, I would definitely bet on 4.8% for the current year.
And you don't think the government will indulge in any, jugglery, what should I say, with numbers, financial engineering, that kind of thing?
The only jugglery, the only risk which I see is that probably they might end up in getting 4.8 by cutting the capital expenditure, which is the most easiest component of your fiscal deficit, because the revenue expenditures are already committed and which has a kind of link to the previous year's expenditure. So there are other issues in that, but that is the biggest risk I find. They might be achieving 4.8, but if they are achieving by reducing the capital expenditure is something which has some growth
implications. The quality of the fiscal deficit matters as much as the quantity, is what you're saying.
The quality and the sub-targets matter. Okay. I mean, 4.8 is only a headline target, and you do have a sub-targets on the revenue deficit and plus capital expenditure.
But what about subsidies? It's very clear that at least oil subsidies were going to hugely overshoot the number.
No, but recently, if you have seen, the increase in diesel price are much more than what they are supposed to be doing in a.
But there still is a sizable under recovery.
Yes, but the size of hike also more this time, right? Instead of that 45 paise, I mean, we have seen a higher increase in the diesel prices.
So you're willing to kind of take the government at its word.
At the same time, at the same time, the exchange rate also appreciated. I mean, we are not at 67, 68 anymore. So we are back to 61.
So that's only because the US has not started its tapering. If it does its tapering, then maybe we'll go on beyond 70 also. One doesn't know.
That we don't know. But at the moment, but that is out of even finance minister's hands. We may have to observe those shocks.
No, but in most other countries, what have you done? You've cut public sector salaries, whereas we have announced a 7th pay commission.
No, we don't. That 7th pay will not come now. It's from 2016.
Absolutely. So you're basically deferring the problems, that's all. But amongst these figures, the current account deficit, the fiscal deficit and the core sector growth, which number are you most hopeful about?
I am more hopeful on fiscal deficit, less on the current account, and to some extent on the core sector. I mean, there seems to be some kind of a revival in the demand in the core sector, I think, which is also reflecting in your capital expenditure, capital sector, capital goods output in the last month. So overall, there seems to be some kind of a turnaround in the IIP activity, and we all believe that the core sector is the leading indicator.
Yeah, it accounts for about 38% of the index of industrial production. So hopefully the core sector is showing signs of revival. It will spill over into the
steel is something within that. If you see that steel is something which is doing much better.
Electricity is also doing better.
Electricity is
But you said you're not very positive on the current account deficit. Why is that so? Because recently we saw gold imports have fallen very sharply in the second quarter.
But you don't forget October, November. These are the festival demands. And you have January and again festival demand. So these are out of 6 months, you have 3 months are festival demand months. And historically, if you see the seasonality, you look at the monthly seasonality, these are the 3 months where a lot of activity happens in the gold sector.
But import duty has been hiked so dramatically, you don't think that will impact demand?
Well, it may not be reflecting on this. I mean, I am not really sure gold is some sensitive to the prices. Particularly in the festival season, and we have seen the same demand when it was 20,000 per 10 grams. We are seeing the same demand at 30,000 per 10 grams. So my guess is that it is not very price sensitive, price inelastic. That's what I would say. But festival demand is festival demand.
So as far as gold is concerned, it's a fixation with the Indians, and that won't change. But on that note, we'll just take a very short break, Bhanumurthy. We'll come back very soon. Please stay with us. Welcome back. Well, political grandstanding is not unique to India, it seems. We share that in common with the second largest democracy, the US, where a partisan deadlock over the federal budget on the issue of President Obama's Affordable Care Act has led to a partial shutdown of the government. It's not the first time that such a thing has happened, but it is a first in the past 17 years. What does this mean for the US and inevitably for India? Remember, the US is still the 800-pound gorilla in the room, so anything that happens to the US has repercussions for every other country. We'll ask Professor Bhanumurthy, but first, let's hear this Bureau report.
The world's largest economy tripped by its own political system. This week, nearly 8 lakh US federal employees had to go on an unpaid leave after the government was forced into a partial shutdown. They were paying the price after the Republican-dominated House of Congress and the Democrat-dominated US Senate failed to settle their differences over the healthcare bill. As a concession to allow the passage of financial appropriation bills, the Republicans wanted to delay the Obama healthcare bill by a year, a deal that President Barack Obama has resolutely refused so far.
The Affordable Care Act is a law that passed the House, it passed the Senate, the Supreme Court ruled it constitutional. It was a central issue in last year's election. It is settled, and it is here to stay.
The impasse affected the National Parks and Internal Revenue Service call centers, the Environmental Protection Agency, NASA, various museums and libraries, port services that in turn affected India's exports to the US.
Our calculation shows that with this shutdown, if we assume that it will go for the next 15 days before any resolution comes, it will rate to about 0.25% reduction in the US GDP. That is the kind of impact one can see.
The crisis is a huge blow for India. India's IT companies depend on a lot of outsourcing work from the US government and private companies. A prolonged shutdown could prove ruinous. The problem is compounded by the fact that the US government will hit its debt ceiling of $16.7 trillion by 17th of this month. If the political standoff continues, it could lead to the US defaulting on payments, plunging the global economy into further gloom.
Because the entire world is linked with the US economy in one form or other. In that context, if you see, the impact will be there in other countries. But only thing is, there is a hope in the world that maybe some resolution will come sooner than later.
Given the crisis, the US president has 3 options. He can ignore the debt ceiling using ambiguity in the interpretation of law and executive powers. He can also cut spending that would hit the global economy. The last option is to default on the debt payments, again triggering disastrous consequences for the world economy. All eyes are on Obama, who has urged the Republicans to allow the government to get back in business. With Krishnanand Tripathi for Rajya Sabha Television.
Bhanumurthy, does this give opponents of globalization one more reason to oppose globalization? Because what happens in the US, it's an internal problem, one would think. But everybody is worried. We in India are also worried and watching what happens in the US. So is this a consequence of such globalization?
Well, we are part of this globalization process, and we all know that there were benefits and we all reap, not just India, many other countries. Even otherwise, even if you want to close your economy and you want to be immune for this, which is something countries like India cannot afford to. I mean, if you see the kind of service sector growth, I mean, we know that we cannot depend much on agriculture, we cannot depend on industry, but if you want to really depend on your service sector, there is no other option other than.
And as it is, service sector growth has been slowing down, so we really need to kind of get
yeah, that is exactly. Of course, I mean, we have diversified our service sector linkages, not just to US. I think we also have in a big way with European Union. The good news is that there is some recovery or modest whatever it is in the European Union. So overall, it's not just for India, for whole emerging market economies. Whatever happens in US is something is great cause for concern. But again, we were in a recovery process. I think the industry was slightly doing a slight recovery. Exports were also showing some kind of recovery path. But this recent developments in the US might affect this recovery process not just in India, but I think across the emerging
markets. Except that the shutdown is on the US government. Most of the Indian IT exports are to the private sector. So should we really be concerned about it?
Well, I think as the report says, we do have many of the service, many of the IT companies are also doing a lot of service to the US government. But one need to really look at other way around. What happens the US private sector in the absence of US public sector, in the absence of US government. So there are some linkage. It may not be a direct impact for India, but the private sector within US might have some impact, or definitely there is some kind of adverse impact on them because of your, I mean, we know that there is no demand. And if the US closes down and lot of expenditure happens in the US government, and which has a demand creating activities, that will have impact on the private sector as well as on India as well.
Okay, I think there's also the feeling that in case the US debt ceiling is not extended any further, then in that case the Fed may extend its tapering, and if that happens, that could be both plus as well as minus.
Yes.
Do you read it as a plus or as a minus?
No, but I think for us the recovery is very, very important. The tapering might have some impact on the financial markets, which my guess is that it will be short-lived if the recovery process is speeded up in the US system, or recovery process takes a hit. So I think our major concern would be the recovery of the US economy more than the tapering and all those things.
Okay, and there's also the issue of in case the US debt ceiling is not raised, there is a fear that the US may default. It's never defaulted so far in its entire history. If something like that happens, what kind of consequence do you see for the financial markets in the world?
I mean, the fact that they never defaulted itself gives some kind of optimism that the lawmakers would sit together and try to solve it. But if they default, yes, I mean, there is no other option. That impact will really fall across the world. So that is
Except
something.
that when we saw when the US was downgraded also, the rating was downgraded,
Yes.
It made no difference. So I think if the US...
But there was some kind of mixed kind of rating. I mean, one rating agency downgraded, another rating agency upgraded. So there was some kind of a confusing signals came that time. Okay. But if the default actually happens, I mean, there is no other option other than downgrading. You know.
Absolutely, and that would have implications and repercussions all over the world.
Right.
So on that note, I think we'll slip into a very short break, but please stay with us. We'll be back very soon. Welcome back. In a bid to stimulate demand for consumer durables, the government has reportedly decided to provide some additional capital to public sector banks over and above the 14,000 crore set aside in this year's budget for capital infusion. The decision, which was taken at a meeting between the RBI governor and the finance ministry in Delhi on Thursday, is yet another attempt by government to shore up faltering demand, even if it does seem to be at cross purposes with the RBI's own attempt to slow down demand in a bid to rein in inflationary pressures and worse, aggravate an already precarious financial situation.
From Navratri to New Year, India's biggest festival season has kicked off. It's the auspicious time to buy homes, vehicles, household goods and valuables. Add to this, it's also the marriage season. Looking to reverse the economic slowdown, the central government is asking banks to offer cheaper loans to consumers to buy television, refrigerators, two-wheelers and other household appliances. A finance ministry statement says the additional amount of capital will be provided to banks to enable them to lend to borrowers in selected sectors such as two-wheeler, consumer durables, etc. at lower rates in order to stimulate demand. While this will bring relief to consumers, especially the middle class, it is also expected to give a boost to capacity addition, employment and production. Factory production figures show that demand for consumer durables declined 9.3% in July. The segment saw a 12% decline in output in April to July against a growth of 6.1% in the same period last year. Bureau Report, Rajya Sabha Television.
How do you look at that, Professor Bhanumurthy? Is that a plus? Should the government be in the business of trying to stimulate demand for plasma televisions, two-wheelers, cars? Or is the government's business something quite different? Should we waste money? You already are. We just discussed a fiscal situation. And the government already had set aside 14,000 crores for the banks. Is there any money to put aside even more money and for a purpose like this?
Well, more than that, I think the government seems to be creating some kind of positive sentiments during the festival season, which is a very, very sentimental kind of a period for the whole country. Now that the fact we have, I mean, the central bank stopped this EMI 0% interest rate, there is no other option for the industries who are sitting on huge stocks, particularly expecting that there is going to be a huge demand for the on the festivals time. So I would view this as a very positive kind of a.
But isn't it a business risk? Because after all, when you kind of build up inventory,
no,
there's like, always a possibility that demand may fall.
No, but then,
and should government be in the business of stimulating consumption or stimulating investment? I thought our problems were that there's no investment happening, rather than that the consumption has been there enough and more.
No, the banking, you also need to really look from the banking sector side. And all these loans is a very short term, unlike, I think one needs to really differentiate between the short term loans for consumer durables compared to what we look for real estate. My guess is that the risk in short term loans for this kind of commodities is very small. Compared to what we see in the medium to short term, medium to long term loans.
We're not talking really about risk. We're talking about giving loans to people to buy these consumer durables at a concessional rate of interest.
Right now,
why should they get these swaps?
Right now, banks are not in a position to reduce the lending rates for
Absolutely.
their own reasons. I mean, the books are not really in a great shape.
No, that's because deposits have not grown. The reason why banks are not able to lend is because deposits have not grown, and deposits have not grown because inflation is so high.
Right.
People don't want to put their money in bank deposits anymore.
Right.
So isn't the government, going about holding the wrong end of the stick? What you really need to do is get inflation down, stimulate investment demand rather than go after consumption again.
One needs to really look this purely as a very, very short term kind of a measure, basically to prop up the positive sentiments across the middle class.
Well, on that note, Bhanumurthy, I think we come to the end of this program. Thank you very much for being with us. But before we close, a quick look at the key takeaways. As far as the fiscal data, current account data, etc. is concerned, Bhanumurthy sees the glass as half full rather than half empty, and he's very optimistic that the government will stick to its fiscal deficit target. As far as the US government close down is concerned, well, the US government does affect us, and he feels that if the government continues to stay like this, it will have repercussions for the Indian economy as well. As far as RBI's loans to telling banks to lend cheap to take away financial, to finance consumer durables is concerned, he feels it's very important to keep sentiment up, particularly in the festive season. Of course, we disagreed on that, but with that, we come to the end of this program. Thank you very much for being with us, but we'll be back next week, same time. Till then, it's goodbye from all of us at RSTV.